NFP. And actually, I know that we keep saying that this might be one of the crucial NFP number ever, but it seems like that it is the case because it will provide timing, especially after this mixed data that we have seen this week. So there's a lot of confusion, even though expectations are that we're gonna see we won't see solid data. However, the mixed data that we have seen the whole week raised some concerns around this scenario. So hopefully everyone you're actually, whether you are ready, hopefully you're ready for the NFP event in less than 20 minutes. Hopefully you managed to do some homework and some planning ahead of the NFP release, risk management plan, money management plan, some breakout points, trigger points, right? So yeah, because expected to be quite volatile one, especially if we have a surprise. So guys, what is expected? I'm gonna share quickly as well the just a second, the calendar, just for a bit. Give me a second. Here we are. I have just adjusted it on the front. Perfect. So what is expected today is 160,000 in FX3's economic calendar, but also I have seen that the Bloomberg has estimated 175,000 for today's number. But as always, key is also the unemployment and also the average hourly earnings. So the reason why today there is actually a contradictory, some concern, some fear, is because of the mixed data that I already mentioned just now. The mixed data that we have seen this week. I'm referring basically to the weaker than expected ADP number, right? The dip that we have seen in the employment component in the ISMS service index, which basically boosted fears over a subpar employment report for today, basically. And because of that, we have back in play the possibility of 50 points rate cut in September. So in basically 12 days from now. So yeah, there was a 35% increase in odds for a 50 points rate cut on September 18th due to the ADP and ISM data earlier this week. So that's why we have seen a lot of pressure in the market. And more precisely, let me just get rid of for now the economic calendar. I have in front of me the stocks. So we have seen that in general the global stocks are under pressure. They have been since yesterday, but also that decline has strengthened further during the Asia session and into the European Open. So we're seeing that European, Asia, and US stocks are lower. They were basically lower ahead of the NFP. We have seen that there is a bit of an easing the last hour. On the flip side, bonds are in demand. Am I sharing correctly? Yes. This is the S&P 500, by the way. Then let me just correct as well the that's I had the S&P 500. So I'm gonna share also the Nasdaq. This is Nasdaq 30 minutes chart. Let me just fix this. 30 minutes. Perfect. Okay. So under pressure, and don't forget also the dollar, which we've seen it drifting down to 100.80 territory, but rebounding just back to 101. Okay, so initially a significant decline on this on the fear ahead of the data, basically, and the fact that an aggressive 50-point rate cut is back in as a scenario, adding to the uncertainty. And also don't forget that ahead of such as important news, we have a bit of a technical pressure in order to create a potential buying the dip over here ahead of the data, which already happened. Actually, that's why we have a rebound. Just to let me just be precise. Basically, in the European Open, we have seen this correction in the dollar. So recovered some of the losses that we have seen overnight. So let's wait and see. Nonetheless, guys, I would like to, as I mentioned to my colleagues earlier today, we don't know what to expect today, okay? So have in mind that even though anticipation is that we're going to have 160,000 new jobs today, however, the data will be critical in order to determine the health of the US economy and the size of the Federal Reserve rate cut. So, okay, let me just check a bit the comments. Also, let's see very briefly what means if we have worse than expected payrolls today or overly positive data today. Okay, so a worse than expected, okay, a worse than expected payroll report. What it means? It means basically that the Fed might have acted too late, so that will boost the odds for a 50-point rate cut. Okay. Now, extremely negative data signal basically that we have a deeper than expected economic problem in US. Okay, so this is what I said earlier. It will show clearly that Fed might was too late. Now, on the flip side, if we have seen positive data, or even worse, overly positive data, this might slow down the anticipated pace of rate cuts. So it keeps us back to the 25 points rate cut. Or if it's like it shows we have back in play a solid labor market, pretty solid, this might even keep the Fed on hold. But this is a bit, it's unlikely, seems unlikely for the time being. But it's not only that, as I said, you need to keep an eye on the hiring, and you need to keep an eye on the unemployment rate. The US job figures that we are expecting is to show increasing hiring and slight drop in the unemployment rate. That will signal stabilization. This is what the Fed needs. It needs to see an increasing hiring, but slight increase, not like overly just a strong bit, but also a slight drop in unemployment rate, because this will signal stabilization of the US economy after that growth scare that we have seen in July. So in line with the expectation, data will be the ideal scenario, but who knows? Also, at this point, I need to let you know that which is an important safe haven, is dollar yen, right? Which has been seen gaining on the fears of a 50-point rate cuts overnight. Now recovered a bit, but the yen, okay, may test August highs. So that means for the dollar yen, that means a return back to the bottom that we have seen. That was basically, let me just be precise, 5th of August, on the bottom that we have seen. That means that dollar yen could drift to 142, or even worse, break it, if the payroll data today bolster expectations for a 50-point rate cut. So if this happened, then we might see finally the breakout of 142 level. If 142 level breaks, that could potentially trigger a sell-off. Okay, so let me just USD yen. This is what we are showing right now. We haven't started actually officially analysis, taking one by one the assets, so don't worry about it. Can't wait. What's your take on gold? Okay, gold is quite stable, and that overall is expected to not to see a lot of volatility in gold. It might be a bit at the end, it might end up where it started. I mean, pretty stable at the highs that we have seen the last 2 months. The one that is expected to in which we're expecting to see a lot of volatility is dollar, to be honest, and this is because we have seen a Bloomberg report as well earlier this morning, presenting that dollar might sorry this is so as I was saying, the one that is expected to see significant volatility is expected to be the dollar today. The reason for that, I'm trying to find that report in order to show you as well. I think I have it somewhere here. I was watching it. It was from Bloomberg regarding the dollar index. So have I found it? Where is it? Okay, never mind. I cannot really find it right now. But nonetheless, okay, I think I got it. Yeah. So basically, according to Bloomberg, the dollar has already dropped for a 3rd day in a row, something that you already can see. However, the volatility spiked to nearly 3 months highs. So something that we need to keep an eye on. That was on Bloomberg quote of the greenback. So yeah. In Asia, we had some limited risk. So, because anyway, in Asia, we had seen a lot of pre-positioning, and that explained this drift that we have seen in dollar during the Asia session. There was a lot of pre-positioning ahead of the US payrolls in 5 minutes from now, basically. And so the Asian traders will have the time in front of them to review the message, to manage their position and exposure, and the possible cross-market volatility that we will eventually see. So, yeah. So, guys, have in mind that right now, I'm going to put the daily chart, that's the dollar, okay? That's the dollar. Come on. It's my dollar. Quite tricky to change all the time the slider, but nonetheless. Can see some questions. What time frame are you using? Buy gold. If dollar against gold will be sell, buy gold. Hello, buy or sell. I cannot advise you what to do, but we can see everything together, so don't worry about it. So this is the dollar, okay, in a daily channel. The reason why I'm showing this is just to remind you, okay, that we're not far away from the 100 territory, which is the years support, and is a very important level that is being closely monitored many months now, because it could trigger further sell-off if it breaks at 99, 98 territory, an area that we haven't seen since June 2023. Okay, so if we have the so-called risk reversal today, okay, that could show a bearish sentiment for the US currency. Okay, so have this in mind. But a lot of uncertainty still on, so we need to wait for the data. This is the dollar. I will zoom in because just 3 minutes left for the numbers to come out. This is a 15 minutes. You know what? For now, I'm gonna get rid of the Ichimoku just to keep an eye. Okay, just to keep an eye on any significant breakout of the 101. Okay, 101 and 100 territory. This is the 15 minutes chart, guys. Dollar. 3 minutes to go. I'm gonna put the 15 minutes chart also in dollar yen, in which I remind you we are quite far away from the pivot point. The pivot point and the high of the day is the 143.48. Okay, but in general is bullish. So right now it's like within the 143 and 143.20 territory. So let's wait and see. Where is my calendar? Here we are, just a few minutes away. And regarding gold, because you keep asking, I'm gonna put the 15 minutes as well in gold. Yeah, here we are. Let me get rid of, so I can see that it already crossed below the Ichimoku cloud, but is within it right now. So we started having some volatility right now. So let's wait and see. And the data, everything depends on what the data will show, whether they will show that the Fed is late, so that will boost the 50 points rate cuts, or whether it will confirm that 25 points that is expected for next month, or whether we're gonna see the solid labor market. So data are out, guys. Data are out. This is gold, a 15 minutes chart, 142. Finally, it slowed down a bit. Unemployment in line with expectations, and average hourly earnings beat expectations. They nearly double. So that is what the Fed needed, right? This is what the Fed needed. That's, let me just quickly turn back to the dollar. Wow, that's a huge move. As you can see, moved up, breaking the 101 territory and bounced by to 101.27 before turning back down again. So guys, remember what I told you earlier, is that sorry, is that this is quite good news for the Fed. Okay, this is good news for the Fed, and that means that we might see that the gradual easing and the data coming, the Fed to proceed with those 25 points rate cut and not more than that. Indeed, and it keeps moving lower. 160. Remember the support? It is still at the 100 territory, but we have a new low. Okay, there is some selling pressure on after the bounce at 101.27. So I'm gonna bring back the data just to explain a bit what happened just now. Basically, it missed expectations, right? Also, there was a revision from a lower from last month's number. So it is looking that finally the labor market shows some slowdown, but it's not only the number, more precisely, and what was actually the focal point, it was the unemployment and the average hourly earnings. Average hourly earnings, they remain quite close to what was expected, while unemployment presented stabilizing. It presented that is stable, and that's not bad at all. So it would have been bad if we had seen a growth of unemployment. That could have brought the dollar into big trouble. However, it's in line with the forecast, slightly lower than last month. So that keeps the 25 points rate cut reduction still favorable by the Fed, by the traders, and remains the most popular scenario for the next meeting September 18th. Obviously, we have still inflation in front of us, but that's not definitely a report that could spark fear. Dollar shows that, okay, it's still too early. Okay, the volatility is extreme right now. We have seen movement in both ways. So we need to leave it a bit to stabilize a bit. But yeah, 25 points rate cut has been confirmed to be the central scenario after this reading. Dollar yen, let me check why. Wow, that's a huge candle. That's a huge candle. 209 pips. Oh my god, guys, look at this. Look at this movement. 209 pips. That's huge. It was expected that the yen will be the one that will see the greatest volatility, and indeed that was the case, and that is the case. However, because the data weren't that bad, actually, were quite good for and close to what was expected. We might not see a significant sell-off of the dollar against the yen, at least from a fundamental perspective. Okay, so just zoom out a bit. Perfect. So I'm gonna start going through the questions and what kind of which are the assets you want me to cover today. Okay, gonna hide this one. Also, there is a bit of a delay as I can see. Okay, so let's do gold actually. Let's do gold. Perfect. So obviously we need to wait a bit for the candle to close. That's a 15 minutes chart. Okay, I'm gonna stick it on the box so you can see, because we're gonna start the analysis right now, the technical analysis. Okay, perfect. Okay, guys, perfect. So correction, revision lower for the NFP, missed expectations. Okay, so that keeps, as I said, the Fed as it was expected to start easing this month. Okay, that's that will give some stability, shows a bit of a stability for the US economy finally. Now, the gold, as you can see, I'm gonna use my where's my Heikin-Ashi? Okay, I have my Heikin-Ashi, so I'm gonna firstly put the 5 and 9 exponential moving average. I have changed it. Okay, I'm back to normal candlesticks, and more precisely the 5 and 9 exponential moving average. So you can see the fact that it bounced to the resistance level of the day, 25, 29 is this territory, was hit, still below it. We didn't manage to see a closure above the first resistance of the day. However, we have a very interesting cross of a 5 and 9 exponential moving average with the 20, with the 50 period moving average, indicating that there was a lot of bearish momentum in gold. It's too early to tell. Okay, too early to tell. So what is expected today is pretty much consolidation. I know that that might disappoint you, but because the data didn't surprise significantly, they were quite close to the forecast, but we had that missed in the actual payrolls number. However, because they are quite good for the Fed, quite favorable for the beginning of the easing, and actually they are in line, they pretty much confirm that September is indeed the proper time for the Fed to start easing, and the 25 points, they're just fine. That's why we might see, as far as I understand it over here, we might see some consolidation, okay? So, however, keep an eye if indeed consolidation, if indeed consolidation prevails, that means that the gold will stack within the 25 and 25.30 territory. Now, if, however, because next week is also in the inflation, so we might see over the weekend a lot of repositioning for that event. However, if we see a breakout, so further weakness on the dollar, and eventually a closer above the 25.30, that will pretty much open the doors for further higher. So keep an eye, because the next key levels to be closely monitored will be the 25.40 and 25.60 territory. Why? Because a break today, within the next few minutes, hours, a break of the 25.30 means the break of this 1 month resistance level, 1 month ceiling. This is a ceiling that gold didn't manage to break in August. So a breakout of that level could attract more buyers, and the next levels that should be the next resistance level, in this case, the next immediate ones will be the 25, let me just be precise, 25.40 and 25.57. Okay, so I'm gonna get back to the 15 minutes chart. I'm gonna leave it like that. I'm gonna get back in 4 minutes. I can see that dollar yen, yeah, as it was expected, is back in the mid. Actually, no, it's back down. Yes, it's back down, 142.40. Let's leave it like that and come back later on. Yeah, dollar is struggling, but it has turned south at 100.65 level. So it still holds the losses of the day. That is also because that the data confirm also that indeed is the start of the cycle. So we might see rate cuts. So the rate cuts basically have already been priced in, and the market has already started pricing in potential rate cuts for October, for November, and December. So to be more precise, I would like to remind you that, what was it? That for the year end, there is still the possibility, let's say, of around the 100 points rate cut. I think it's more than 100. Let me check the Fed watch just to be precise. But yeah. So remember that markets are always ahead of themselves. So you need to keep an eye on that as well, because this is something that could keep the dollar under pressure, or even open the doors further to the downside, because the market are always ahead of themselves. So the November rate cut might start pricing in the market, the December one, and so on and so forth. So that's not gold, but the dollar. So that means that you're doing good on the trading the news there, Edwin Frost. That's good thing. No account blown. Not account blown. Come on. So guys, come on. Let me know which assets you want me to analyze. Come on. Anything that triggers your attention. Aussie yen, by the way, pound yen, Aussie yen have been in a clear trends in August, and in January and September, I should be more precise, but some clear trends. So let me know what you want me to cover, because I'm here. This is your session, and I'm here to help. It's good to sell gold. Okay, you're obsessed with gold. Okay, I see why. Okay, this is the 15 minutes chart, by the way. 15 minutes chart. Why the caption is completely wrong every single time? This is gold. Okay, guys, good. Okay, we can see that. I'm gonna turn back to the Heiken Ashi setup. Okay, it's quite preferable in such a tight tight time frame such as the 15 minutes chart. Here we are. So we have the bullish cross, but as you can see, the moving averages started pointing on the left-hand side. So stability. That candle is just ready to close. So come on, come on, come on. It did actually. That's the new session. This one has closed back into the open price, so in the mid of the range, while we have a move higher, but we need further confirmation. So this will be consolidation for the dollar, I'm afraid, within the day, guys. So you need to keep an eye on any swings up to 25.30. They might trigger the reversal down to 25,000, and any test of the day's low could mean a rebound. So yeah, overbought, trying to correct a bit, but there is not enough steam yet. See, there is not enough steam for that could confirm a reversal, because you see there is a lot of mixed picture in the momentum indicator. MACD 0, confirming the possibility of a consolidation today. RSI is at 59, but points lower, okay? And stochastic are still bullish. So it's like a very, very mixed picture. So this is just the need, this reversal is just the need for for getting back into the Bollingers, and because it has been overbought, so it's the need of a correction, dear Ayobami. So be careful. It's not a signal for selling the gold yet. Okay, maybe it's better to wait a bit for the market to calm down, okay, before you take any decision. I want you to be quite careful. A selling point in this case, because you mentioned the selling scenario, it will be if, I don't know what kind of time frame you're trading, okay, but let's focus on the 15-minute chart that I have in front of me. For for something to present to confirm a reversal, that means that we need to see the following candle to close close below the 50% reversal, basically the mid of this latest session. The mid of this session is 25.18. So only a move below that level could indicate some selling pressure in the near term. On the upside, only a break above 25.20 could be the trigger point for could eventually suggest the retest of 25.45 and 25.57, as I said earlier. Okay, so it's too early right now. The candle doesn't show any clear indication. Look at that. It was bullish indeed, yes, but the tail of the bottom is huge, and it failed to break the first resistance of the day. This candle is still it's still like it's doji, and it needs a correction because it's outside Bollingers. So be very careful, and especially because the momentum is mixed right now. So yeah, Drew pound cable. Yeah, you're absolutely right. Okay, 15 minutes chart, bounce, boom, 132.23. Let me just show you something. I don't know, I think I presented it last week as well. Is that ascending triangle that is that we have seen the pound to hold the whole year, actually since 2002, for 2 years in a row. Okay, the asset managed to break it and move above it. in the mid of August, quickly turned back within the channel, didn't stay for long, and now it's still back above the channel, and actually for 3 days in a row it holds at the upside. Don't forget that in the overall picture, this breakout indicates the possibility of a new trend, of a new bullish trend for the pound. This is for the medium and long term, especially as soon as we see the breakout of this latest swing. Okay, so overall picture for cable is bullish. Now let's turn to the 4-hour. So this is the last session. So 10 minutes left for this candle, 4 hours candle to close. And look at this beauty. Consolidation pretty much looks like a block. Okay, boom. So 9 minutes left for that candle, 4-hour candle to close. But this, if it close indeed positive above this temporary zone, that could mean the return back to 132.70 territory. So I'm gonna, because also the fundamentals support it, and also the momentum support a bullish, a further bullish bias in cable. Look at RSI, keep moving higher, and there is further room northwards. Now, 1-hour chart, let's see. Okay, we have 8 minutes to go, but still, it is what it is, supported by the moving averages, so there's nothing to tell. And I'm gonna also use the Heiken Ashi as usual, just to confirm something, confirm the momentum basically. That's the 1-hour chart, okay. Is back into the close to this range, so we need to wait and see. But yeah, positive rising bullish bias seems to be the case still for the cable intraday and in the medium term. So I'm gonna put the 5 minutes chart, bam, 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 sideways a bit. So let's wait and see. Okay, I'm gonna get back to that DEX in a bit, just in 8 minutes, just for that candle to close as well. Okay, perfect. Just to see, because I want to see the 4-hour chart for sure, actually. Okay, now let's get back to gold. Okay, dollar ZAR. Dollar ZAR. Okay, nice, nice. Let me share your comment, Regan. So nice. 15 minutes chart, dollar ZAR. Broken the block over here, right? Broken, extended lower, close lower, continues lower, but it's not only that. We have a lot of bearish signals. Not only the actual candlestick, the actual Heiken Ashi candlesticks with significant lows, actually with the lows well far away from the range that we have seen this morning, but also bearish cross from moving averages. The MACD turned negative, okay, even though RSI is still close to 38, so it is below the 50 zone, but it's looking slightly higher. Let me just, yeah, but overall, yes. So selling pressure is back in play for dollar ZAR. So basically ZAR gains some ground against the dollar. So remember, basically I'm gonna bring, I think that will help you more. I'm gonna bring back the candlesticks. So this is the candlesticks. So have in mind, guys, that here we have the latest swing, right? Overall, anyway, the asset moves below the pivot point. It holds below the pivot point the whole day. So this candle is about to close in 4 minutes from now, and this is the latest swing that we have seen, the latest fractal. So that the first support of the day has already tested, hasn't broken yet, but the momentum, look at that, RSI turned negative. Actually, it's pointing lower. MACD is anyway negative. Stochastic has posted a bearish cross. So the next support levels for the ZAR is its support level. So 1760, 1755 level. So because it seems that, yeah, the NFP attracted some sellers, and the asset keeps falling lower and lower, and possibly a 30 minutes bearish cross between the 5 and 9 in a 30 minutes chart. So look at that. Look at that. Overall, the dollar ZAR, dear Regan, is being under pressure, right? I know that a lot of swings is what we have seen lately, but it keeps failing to extend higher. It's anyway below all the moving averages, the 20, the 50, the 200, the 5 and 9. So the only thing that we are expecting to see, okay, at least for the week, in order to be prepared for the week, is the closure tonight below the 1765 level, because this could open the doors to where? Back to July's bottom, okay, or even worse, back to October's 2022. But that's the long term. 1, 2, a third consecutive daily candle today could suggest, let me see, I'm gonna put a flip, and we're gonna flip the Fibonacci's, okay? And look at that. Okay. I need to add the weekly chart so you can see what so here we are. Sorry guys, it's not clear, it's very messy. Let me, in order to be clearer, I'm gonna use, yeah, nice, okay. Here we are, I'm gonna use price action. Here we are, you see, that was the key support zone, which already broken today. So the confirmation will come with the asset continuing south. Okay, so you put the 1 hour chart, here it is. It's ready to close over here. So a move further southwards, it just suggests, come on, it will just suggest, here we are, boom, boom, boom. We just suggest the retest of 1730 level, right? Look at that. Consolidation, but the asset is ready to close, to reject this neckline and extend lower. Already, as I said, broken that level. So further hourly candles right now into the US Open, further now northwards, could suggest the retest of 1755, or even for the next week, the 1726 level. So keep an eye on that. Keep an eye on that. This is a clear breakout of the ranging market that we have seen since yesterday. So that could open the doors further lower. I'm getting back to the pound because I want to monitor that 4-hour candle that I talked about earlier. Beautiful. Here we are. Simpler. So indeed, guys, look at that. It closed above it. Okay, and not only above it, but actually already retested the previous two swings over here. So that's the next, basically the performance of the pound remains indicates further support, further move higher, further bullish bias. Here we go. Nice and easy. A bit oversold intraday, a bit overbought intraday, but okay, that could mean that it needs to get back to into the Bollinger's, but it is what it is. Well supported, strong momentum still holds. So yeah. So yeah, indicates the return back to the highs of August, to August highs. Look at that. Let me check with the high Kanash as well. I remind you, this is the cable. Let's see the momentum. Yeah, nice. It's like a rounding bottom, which hasn't been confirmed yet, but yeah, something to keep monitoring ahead of the new week. A break of a move above 132. So August highs back in play, and be careful because next week or even tonight, depends on whether we're gonna see any further news overnight, a move and a break of this latest swing could find resistance much higher, much higher. But yeah, that's just something to think about for next week. Pound yen. Pound yen. Pound Swiss. Let's have pound yen. Okay. Okay, dear King, this is the pound yen in a 30 minutes chart, and it seems that it's running out of steam. Look at that. Moving averages have flattened a bit, and after this huge indecision, we have seen that the new candle is steady within this range as well. So you need to wait a bit because that might eventually reverse. So what you need to keep an eye on, you need to leave this candle closing first of all, or even, okay, depends, we need to wait for this candle to close, but consolidation, okay, if we see consolidation, you need to wait and see a bearish candle. So for example, like here, okay, look at that here. Consolidation started until it finally had its first swing lower with a more decisive candle and a break of the previous bottom. So you need to wait a bit. Yeah, now it's not that's not really, let me just measure a bit. It's not really indicating, indicating a precise direction. Obviously, the body of the candle, which is also, oh, that's actually very, very good, is in line with the Fibonacci levels, very close to it at least. But yeah, these are your immediate support and resistance levels. What that means, it means that a closure above this level could suggest a move back to the 89.26 and 89.50 territory. A break of the 188.50, then it could suggest a pullback and a return back to this level over here. Here. This was the previous swing high, so converted. So it was a key resistance, now converted into support, and it's a round number 18800. Okay, so move below 88.50 could indicate the retest of the round 188 level, while a break of this, okay, let me round it up, 90. There we go. Actually, that was the, yeah. Here we are. A break of the latest swing could open the doors to the weeks, these weeks top zone. This one basically. But for the time being, it's a wait and see stance. You need to be in a wait and see stance. Gold. Yes, you're right, dear. You mentioned it 15 minutes ago, so hopefully you benefit out of it, dear Junior. That was a good call. Indeed, it broke the 50% Fibonacci level that I told you about earlier. And as I mentioned, this is an area I had it draw earlier. So yeah, that definitely attracts the sellers. See? So it's important for you to identify support and resistance levels that will act as your trigger points, your entry levels. Because I mentioned earlier, when I initially analyzed gold, that we need to find the mid of this candle, right? Remember? And I place a line at the 50%. And I mentioned that it's overbought in its correction, but a move below 50 could suggest the retest of today's low. So the 25.07 level. And this is indeed what happened. Why am I unable to penetrate on HFM? Dear, have you provided your KYC? Have you has your account, your wallet approved? Have you done all the necessary steps? If you're struggling with anything, please contact our support team, either on the chat that we have on the website or via social media or via your agent. They will be very glad to help you. May you please explain explain a bit the big up and down movement in gold? I mean, if the news were positive for gold, why it went down abruptly too? Okay. The ups and downs is because of the volatility. Okay, NFP is one of the most important and the most volatile news because of how crucial it is. So the ups and downs that we see, not only in gold and dollar during the news, is because of the volatility. But today, what we see from fundamental perspective, what we saw from fundamental perspective, is that the jobs basically the data today, why we are so important is because we were waiting to see. Basically, we wanted them. We were waiting for the data. Sorry, in order to clarify what the Fed will do in the next meeting. So the data today basically show clearly that the Fed, that the Fed will definitely start easing in 10 days from now, okay? And it actually confirmed that we're still waiting the 25 points rate cut scenario. However, because next Tuesday, if I'm not mistaken, we have the inflation, the 50 points rate cut is still in play. So right now the market is 50-50. And actually, I'm going to show you the Fed watch. Let me check if it's updated. Right now, the Fed watch, the odds for a 25 or a 50 points for next week, yes, it has been updated. Look at that, guys. Look at that. Indeed, based on the data, we're expecting a 25 points indeed. The 25 points have been confirmed. However, 50 is still in line because there was a miss in the non-farm payrolls. Indeed, the unemployment came in line with expectations. Average hourly earnings increased. Average hourly earnings, however, for the month a bit. Okay, so that still shows that there is a slowdown in the jobs, but it's still it is raised the question still whether there is room for 50 points. Everything will get clearer after the inflation, but with this report, even though it was nice one, we haven't seen any surprise. We haven't seen a solid labor market back in play that could have delayed the easing. The report suggested that yes, no matter what will happen, on September we're gonna see the beginning of an easing cycle. But it didn't clarify whether we're gonna stay with the 25 or 50. Okay, that's why the markets right now, the odds, the Fed rate cuts, the rate possibilities for next meeting are 50-50. This is why, my dear friend, we are seeing this bounce, this ranging market. I mentioned it before. I told you guys that, okay, not the significant surprises, nothing negative. I mean, nothing that could suggest that the Fed needs to halt rate unchanged or has acted too late, not for the time being, but that keeps both scenarios in place. So we are 50-50. Okay, clarity will come with the inflation. That's why the market, the gold, for example, over here, has seen initially a move up and now move down, and it's expected to remain in a range, my dear Mario. Okay, the ups and downs and generally something that happens during the news, okay, because of the extreme volatility. And that's why, but in this case, because the support and resistance level that we had in mind, and that which would have possibly hide some buying or some selling. I'm referring to the 2530 and to the 2500 territory that have not been triggered, have not been retested. So that's why we have an asset that is still within range. This is the 15 minutes chart, okay? So don't get confused. If I put the 1 hour chart, okay, this is actually, if I put the daily chart, for example, the gold is still in the upper Bollinger Band area above the 20-day level and within the 2-3 weeks range. Look at that, double bottom, 2 fractals, double top, 2 fractals. Okay, so it is still in a range market. So any reversal, like you said, I mean, if the news were positive for gold, why it went down? Because of the uncertainty. I'm afraid this is because of the uncertainty. I just show you the Fed watch, and you see it's 50-50. So people don't know what to do. And of course, forget that it's Friday. People will start, and they have already, some of them started repositioning and closing position ahead of the weekend. The Asia market, the Asia traders, they have already set some pre-positioned ahead of the NFP, but in general for the new week as well. So there is a lot of profit-taking condition. There might be actually even more profit-taking condition later on as well. But it's Friday, don't forget that. And there is a lot of uncertainty. So this selling that you're seeing, okay, because if the news were positive for gold, why it is went down upwardly? Because of this uncertainty, profit-taking condition, because it's the end of the week, okay? But nonetheless, is still within the range. So nothing major has been triggered yet. Remember, this is a 15 minutes chart. The one that I was showing earlier is a 15 minutes chart. So this is for intraday. Intraday. This is the intraday picture for any scalper or anyone that is trading with in such a short time frame. So the reason why I put the 15 minutes chart is just to show you that for the next few minutes. So in a short time frame, we are seeing a reversal, a correction, basically returning back to the pivot point of the day. We are seeing a bearish cross from the moving averages over here and a bearish cross from stochastics. So it seems that there is some pressure in the short term. So pivot point has already breached. The next support is still at day's bottom. So few dollars lower, 25.07, sorry, which is ready to break it basically right now. So the very next levels is this one. Basically the 25, 2500 territory, the round number. If we see, can you see my fractal? if we see further decline and a break of the day's low, that could open the doors to the round 2500s territory. And basically, we might see some support at 2502 because it's a double bottom over here. But yeah, this zone over here. This zone over here. Okay, don't try to explain it. Okay, sometimes you don't need, it's not everything is based on the fundamentals, especially for such a tight time frame such as the 15 minutes chart. This is not in line. This move, this in the 15-minute chart, is not in line, indeed, with the fact that we are expecting more and more rate cuts, but because it's 50-50 and it's causing all this uncertainty, that's why we have seen basically the dollar gaining some ground against the gold, against the yen, I assume. Now pretty in line, pretty consolidated, stuck, basically stuck. Let's see, dollar, yeah, gaining some ground, but that's just the 15-minute chart, guys. If I zoom into the 1 hour, you can see that, yeah, just still close to the 101. Yeah. So the daily picture still looking bearish. Intraday, however, there is a lot of uncertainty still, not a clear a clear direction yet. Remember, especially if you're using Heiken Ashi, clear direction is only if we have candles with no tail at one of the side. I mean, if you have bullish candles, then if there is no tail at the bottom, that indicates that there is further room to the upside. If you have bearish candles, no, you shouldn't have a tail at the top. That suggests further dip, further room to the downside. Oh, right now we have nothing. We have uncertainty. We have consolidation. So be patient. Wait. Okay. So there's still the U.S. market. The session has opened. We have more than 8 hours in front of us. Okay. Buying consecutive. Everyone's a gold trader, right? There's a chance for a quick sell on gold. This is what happened indeed. Gold is trapping buyers. Gold is probably sell next week or later. I cannot agree. I cannot disagree either because of the inflation. I'm afraid it's on Wednesday. Sorry, it's not Tuesday. It's Wednesday. So yeah, that would be very, very crucial, I'm afraid, next week. And next week is also a very important week, exactly because it will give us a clear guidance, a clear timing. Could indicate whether we might see how many rate cuts we will see until the year end. Yeah, but guys, just do your homework. Find your support and resistance levels in a daily time frame and into the 4-hour time frame, just to be prepared for the new week. And also to be prepared if any of these support and resistance levels break. Okay? Set some pending orders, set some alerts. Okay? Don't you so trapping buyers. Okay. Gold is going to retrace lower, then consolidate. Yeah, this is the case indeed, Junior. Good call. Good call. It wasn't an easy NFP today. It wasn't a clear NFP. And I understand if you're struggling because it didn't had an inline result or a result really close to the expectations. It's not really easy to trade because at least with a surprise, either in the one direction or to the other, you will have a lot of volatility. You can see the most of the times you can see clear trends. But this is leading to consolidation that might be a bit worse. I know, not easy, and that's why I said. So if you cannot explain it, then stick on your technical analysis. Okay, I have a lot of time frames over here. Stick, however, to your own time frame, to the one that you are usually trading, and to the time frame that your trading plan has been is based on. Find your immediate support levels and keep monitor whether support and resistance levels, and monitor whether they will be triggered and break, because that will be your entry point, right? So stick. Don't try to explain it. Stick on what you see this time, okay? So, pretty ready to break that support that we were discussing earlier. The day's bolcho. Remember that, something that could bring it back to the 2500s territory. Something to keep an eye on, guys. The 15 minutes candle will close in 3 minutes. So yeah, there is a lot of pressure actually. Stochastic keeps pointing lower, RSI the same, moving averages the same. So there is, yeah, it seems that gold, at least for this very short time frame, will continue southwards. Gold sellers take partial moves, take partial moves, stop loss to break even. Yeah. What about Nasdaq? Yes, indeed. What about Nasdaq? So we haven't checked the stock market, but okay, that gave a significant boost. Obviously, why? The higher the rates and the faster rate cuts, faster and bigger rate cuts support the stock market, because suggest less expenses and less tax for the corporate sector, for companies. That's why an easing monetary policy, a loosened monetary policy, is something that supports the stock market. So that's why that gave it a boost. But it looks that dear Missy, it's already running out of steam. It looks that it was once off, close within the Bollinger Band. It was a bounce, but momentum is still the signal line basically is still below, below the below zero. RSI flatten, so it might consolidate. It consolidate for a bit. Let me see the daily picture. Anyway, the last 2 days Nasdaq is like steady below the 1900s territory. So 19,000 territory. 19,000 is the key resistance. But yeah, a lot of consolidation has been seen for Nasdaq. Yeah, it's expected to close the week a bit muted. Yeah. So Let me just prepare my support and resistance levels. So, okay, that's nice. So Fibonacci expansion in this case help a lot, guys, to monitor the Nasdaq ahead of the weekend. A break of the 100 Fibonacci level, which basically will suggest the break of the 2 days support of the last 2-3 days support, could trigger the attention down to the 18,317 territory. But for now, especially with the momentum being flat, RSI flattened, that's unlikely, okay? But something to have in mind for the upcoming week. Yeah, a lot of cautiousness and really stable Nasdaq, at least the overall picture. Yeah, intraday picture the same. Bounced higher, but flat Bollinger Bands suggests that it will remain in range in a ranging market. So bouncing between 19,000 and 18,750 territory. So within the week's range. Okay. That's the fundamental. That's fundamental. Not only in the forex industry, but in our daily lives, right? Right? Supply and demand, demand and supply. In order to buy something, someone else will sell it to you. Indeed, someone has to take the opposite side of your trade, but you need to make sure that you are in the correct side for the time zone that you chose, right? And at least that you have set your stop loss in order to even if you're against the trend, to gain on any correction. So that's why you need to we keep saying about risk management. So guys, if there are no further questions, I'm gonna call it a day. I will just try to check a bit whether there's anything coming up, any headline that I have missed. Once again, the figures were just fine, were not bad and not good enough, but they weren't bad. That's why we have the 50-50 pricing, that 50-50. It didn't basically reply to the question whether we're gonna see 25 or 50 next in 10 days, 10 days from now. But inflation could clarify whether we're gonna see 25 or 50. So that's why stick on what you see and don't try to explain it. Okay, obviously, as you can see here, dollar has strengthened a bit. I'm gonna use the 5 and 9, strengthen a bit after this indecision. It's back above the pivot point of the day, but limited gains. Okay, limited gains are expected. As you can see, it's already looking that that bounce is running out of steam. Okay, already is looking that is running out of steam. RSI flattened, stochastic posted a bearish cross. So this bounce during and 30 minutes after the data is looking that is running out of steam. So rely on your support and resistance levels. The reason, I clarify once again, the reason for this boost, it was that it was boosted because the market saw uncertainty. We have uncertainty. So if you see the dollar rising higher, okay, this is because there is uncertainty, there is fear, and don't forget that is a safe haven. So a break of this latest swing high, which also coincides with 1, 2, 3, 4 fractals, up fractals, could attract even more buyers and could boost dollar to 101.50 level. Okay, so yeah, guys, any further questions? I agree with you, Junior. It seems that you know what you're doing, and well done for that. You understand the markets, you understand the basics, which is the most important part. And what you mentioned, take partial positions or moves. It's a very important risk management technique, and well done. Well done. Not for the time being, but let's wait and see. Already kicked our zone, guys, already. Okay, so I will leave you with a short-term bearish gold and a short-term bullish dollar. I cannot see any further questions, so I'm going to call it a day. Thank you very much for joining. Hopefully these sessions help you. If not, give us feedbacks. Let us know what you need, how we can help, what we need to do in order to do these lives even more informative for you. Okay, thank you very much. Have a great day ahead. Take care. Stick on what you see. Thank you very much. Bye-bye.